buy or sell the green bond ETF. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So we go to fixed income. And here we see a very interesting new type of ETF called, the green bond ETF. You can see that, it's basically at, the 52-week lows. So we have seen a -4-ish% pullback. So let's look at what's, happening with this one. So we start with weekly data points, big picture, and we jump right into the charts. I do think that there's something interesting happening at this point because we are testing this very important support level, the red 200-week moving average. You can see that multiple weeks now in a row we have been testing it. 1, 2, 3, 4 weeks of testing that super important level. It is very obvious that the bulls are responsive. However, we have not seen any, especially, big rally so far. Part of the reason is that we are, part of this huge head and shoulders pattern that is, for all intents and purposes, a bearish technical pattern. The problem with the head and shoulders is the potentiality of horizontal support, or also diagonal support around the neckline. So what is supporting a more bearish take is this prior history with head and shoulders. Here you have head and shoulders, and we did see a pretty substantial sell-off. So I do think that is one of the things that are making people a little bit extra cautious here, because the bulls are bouncing from support, but they are not fueling the rally. It's very tepid, but I would lean bullish here, but the bullish thesis is definitively contingent on red 200-week moving average holding as support. So here we have the daily data points, and it is pretty clear, that the bulls, they come back at this very key level. So yeah, I think we just have to look at some additional indicators here. When we look at the RSI, we bounced from a similar weekly RSI level that we had back here, and that led to a significant rally. When we look at accumulation distribution, it is actually a bit higher here than it was here. That is a bullish divergence. Looking at the PPO, we are bouncing from a low that has formed key lows in the past. That's bullish. Something happening here with the MACD. That's interesting. When we look here at the distance from especially the blue 100-day and the red 200-day moving average, we are at a very key historical low. So yeah, I would lean a bit bullish here. When we go and look at statistical correlations, weekly data points, we have a 61% positive with the S&P 500, 38% with carbon emission futures. And then we have -60% here with the dollar index. On the daily data points, let's load in some data like that. -21 with the S&P, -21 with carbon emissions futures, and then we have -36% with the GRBN, which is the Global Carbon Credits ETF, and then -35 with the dollar index. Okay, we don't have that much seasonality data, but what we do have show that November and December and January are seasonally strong months for this bond ETF, which is bullish. We are bouncing here from this diagonal trend line that is found by Finviz. That's bullish. When we compare the total international bond ETF, the BNDX with the GRNB, and we look here at performance, we do see similar-ish year-to-date returns when we jump here to the dividend. So you get more than double the yield here on the green bond ETF, which is bullish, because when you get into bonds, you do want yield. When we look here at the holdings, so you can see here that we got some Fannie Mae, Government of Chile, Apple, European Investment Bank, International Finance Corps, District of Columbia, Verizon, the Industrial and Commercial Bank of China. I mean, and then you have Netherlands, Citigroup. I mean, this is very interestingly diversified. So here you can see, the asset allocation: 72% corporate, 19% sovereign. Yeah, this is yeah. I think that overall this is a very interesting ETF, and this whole green movement, obviously it's a very strong megatrend, and this is one of the ways you can get into the fixed income aspects of it. As far as the technicals go, it is pretty clear that the 200-week moving average in red, it was really important. It is very clear that the market is responding to it, but we don't see that follow through yet. The reason why I wanted to make the video about this one, that's because in order for something to rally, people need to be bullish, right? You need more buyers than sellers. So this is one of the reasons why it is very prudent also to look at things a bit early. Because if you always have the method of waiting until you have tons of confirmation and the move has already happened, then you will never be a part of the teams that form lows or form highs. The market is to a very large extent driven by psychology. So for something to go up, you need bulls to start talking about bullish things that they see. For something to go down, you need bears to start talking. So yeah, it's something that is very basic about the markets, that many people just miss. So yeah, I do think it is very important to try to pick bottoms and also try to pick tops, because that is what the big fish are doing.